All right, so welcome back to the TradeOps-Channel. So today, guys, I will be explaining to you how I traded gold yesterday using smart money concepts, liquidity grab, and price action technique. So this is a technique that many hedge funds and institutional traders are using when trading. So this is a little bit different than what the most retail traders are using in trading. So most of the retail traders are using indicators like MACD, moving average, trend lines, and so on. But here you will see that this is quite a different way of analyzing the market. And the core concept of this is taking advantage of those liquidities which are set as a stop loss, and hedge funds and institutional traders used to hunt those so that you will be stopped out, and then they will reverse the trade, and it will go to the direction which you are actually expecting. So learning this kind of technique will give you more advantage rather than using the retail concepts. So it puts you ahead of many traders. So all right, so here I will be explaining to you my trade on gold yesterday, and then how it also moved today. So you will see that if I still hold on my position yesterday, you will see that it could have been a much bigger profit. But I don't hold my trades overnight due to some unexpected volatility spike. So that's why I need to close it during the day, and basically I don't need to capture the entire move. So what is enough for me is that once I get the minimum of 2 hour and above, then that is already fine to me. As long as I am risking only a small amount, but if I am right, I am winning bigger than my risk. So all right, so before we continue, please subscribe to my YouTube channel. It's TradeOps-Channel in YouTube. And please like and subscribe so you can be notified on my next uploaded videos and blogs. And by the way, we are just 5 subscribers away from 1,000. So be the first 1,000 subscriber. All right, so here, firstly, I always analyze the higher time frame. And as you can see, this leg is downtrend. Even in the higher time frame, this leg is downtrend. You can also say that this is uptrend, but I am focusing on this leg now. So that's downtrend. Therefore, most of my trades in the past weeks were bearish for the gold. However, if you'll notice here, I'll just delete all, hide those indicators. Other indicators are marks. You'll see that there is a change of character here in this side. So the change of character is basically the first sign that the character of the trend is changing from downtrend to uptrend. And it's an important event for me because this is a situation when the long traders are stepping into this market. Okay, so now I know that there is a change of character, so therefore from bearish I will go bullish or long trades. So now I analyze the 30 minutes and I will check the price as compared to the previous Friday. So this is the Friday range, high and low, indicated by these red broken lines. This is the high of the previous week and the low of the previous week. And in here, you'll see that this is Friday, this is Monday, and this is the first green day. So this is the first green day during that week. And it means that this is the time when the bullish traders started to step in. However, we know that there are stop losses behind that, so that the price moves back to that. So actually, in the Tuesday, I also traded this long because now I saw the stop hunt, which is indicated by a pin bar here. This is stop hunt, and then I wait for the price to come back to that stop hunt level and see whether the price is now starting to bounce, meaning to say that long traders are starting to mitigate to protect their long positions here to get stop out. So meaning that it might trigger more and more orders to go long. And another is that those bearish traders here starts to take profit. So if they have short orders here, now they are already holding a nice amount of profits. So they need now to close their orders by buying it back. So therefore, it's igniting or putting fuel to the fire so that the long traders here are becoming strong. So this is the effect of that. Plus, there are stop losses set on top of this. So they are now stop out. And this Friday high also gets stop out. So normally, after a breakout of the Friday, there is a pullback. And then you see, this is the point before the pullback, before the breakout, and those breakout traders are setting their orders here with stop loss here. They also mitigated the risk by buying more, or other traders started to play the pullback, breakout, pullback, and trend. So there you go. The Wednesday was also long, but then later in the day, it pulled back. So now this one becomes interesting, the Thursday. So this is the one that I will explain today. So this is the Thursday. This is the Thursday range. So let's mark this with this purple. So now I will use my session separator. I normally don't trade the Asian session. And as you can see, we have here the high and low of the previous day. This is the low, and I wait that the price will stop out the low of the previous day until, so any pair becomes interesting to me whenever the price is hitting the high or the low of the previous day. If it is not yet doing that, then I don't mark that pair as interesting during the day. So here, Asian session, I don't trade that. And as I'm only watching Asian session range, because the next session, which is London, will stop out those traders' orders or liquidate those orders below low of the Asian, as you can see here with the nice candle beside this red. And also it was a stop hunt of the low of the London session of the previous day, also stop hunt of those traders who are setting their stop losses to break even. So we pull back. So this is a confirmed entry here. And not only that, even if you entered here, there might still be another pullback for another trade. So this one I could ride this move to here. And another opportunity, so in the US session, so I traded gold 2 times in the London and another session, which is the US session. And as you can see here, if I go to the lower time frame, this is how these smart money traders are playing this market. So if you have a long order here, and you keep on holding and you don't take your profit. So it's very important to take profit in time. And if you have already like 3-4 hours, you should somehow put out some money from the table, take some money from the table, because this strong move is not always continuing to move up without any pullback. So like what I said, so I have usually 2 positions in a single pair. The first pair, when an order, for example, I order here buy. When it reaches 2R, I take my first position and set my stop loss to break even. And next is that the second position, I will allow it to still move farther until I reach a well-defined time. So the another thing, important consideration for me is not only the price, but also the time of the day. And if I entered my order around 11:30 to 12, so most of the time it achieves its peak before the US session is opening. So like this here. So here I take out my profit because later on, once you can already secure some profit, you are now good for the day and you are ready for the next session, the US session. And take note that smart money traders likes to liquidate high and lows. And here, as you can see, there are accumulated volume here for long traders. And here, what happens during that US session? It liquidates those stop losses below this. Okay, and then it will let also other traders to go inside because they think that it is now bouncing. But then later on, when the stock market or there is an important news happening, it gets wiped out, all of this, then pull back to the deeper part of the demand zone. And many traders are still have this stop loss here. So somehow here, those long traders who are setting their stop loss here, they try to mitigate that risk by buying more. So here, this is a very important opportunity that you can enter in the market. And if we go inside that one and use a low time frame, we'll see that how this will play out. See, at 1 minute, there is an engulfing bar. This is an indication for me to enter because this one means that they tried to hit the stop losses of the low of the previous session. However, the long traders are mitigating the risk so that they won't be stopped out. So they are buying more. And to detect that is with an engulfing candle. And if you are late in that, so the engulf will only take place after the engulfing candle is formed. So you will feel that you are now late, but don't worry because there will be a pullback. So, and if there is no pullback, then better not to trade. So you should not hunt or try to catch that move up because it's better. It's very, very important to be patient in this trade. So here I could enter another buy here. So let's fast forward the price action. And my stop losses are here in this trade. Same stop loss as the institutional traders. So here it is. I am already done for the day. My target profit was hit. I'm done for the day before 5 p.m. here in Central Europe. Although it still offered later on another opportunity. As you can see here, this price action, although it's already at 647, it is liquidating those stop losses who are set here below this price action. And then offered another engulfing bar so that you can enter another buy. So if I hold my trade until the next day, which I don't usually, unless I am very, very profitable. So maybe one of my orders are just set to break even and then let it, play out for the next day. So if I hold it longer, so here you go. It would have been a much bigger profit, but I don't care because I don't regret because I know that my system will always play out and it has an edge. And if I repeatedly use and follow these rules that I have, I am very sure that my equity curve is going up and not down. All right. So guys, if you would like to learn smart money concepts, liquidity grab in Forex trading, and it can also be applied in stock market, please don't hesitate to write a message to me and I can send you more details about my TradeOps mentorship program. Again, have a nice day and see you again.